Yes, I think there's a bit of cat and mouse going on here. I think everyone is slightly afraid to go before the Fed. There's a clearly exchange rate impact as well. I mean, the S&P is clearly the exception, but the inflation problem is slightly different there. I would say the key thing for the ECB is what happens to the euro. Currently, markets are pricing in a fairly similar path for the Fed and for the ECB. We take a slightly different view to that. We actually think the Fed will keep on hold for the rest of the year. If that plays out and then the ECB starts cutting...
So who keeps on hold for the rest of the year?
The Fed.
No rate cuts this year?
That's our base case view at Vanguard, yes.
That's absolutely fascinating, isn't it?
And if that's true, and the ECB does cut, then that raises the question what happens to the euro. Yeah. The euro may depreciate, we don't know by how much, but if you get the euro, say, going towards parity, I mean, maybe that's an extreme assumption, then that clearly raises inflationary concerns further down.
Thomas, who's a correspondent, he apologised for bombarding me emails. Don't apologise, Thomas. I think it's very interesting as well. If the Fed can't cut or doesn't cut this year, how... you're an economist, so you can say, I don't do equities, but you can give us a little bit of a clue. Do you think the equity market is going to have the mother of all hissy fits?
Well, it's a tough one to say. I mean, as you all know, rate cuts have already been priced out from 7 rate cuts at the start of the year to 3.
Yeah, and markets done brilliantly ignoring that.
Exactly. So it depends on the reason why the Fed is coming. If it's because of a strong economy, especially supply-side driven growth, which is also disinflationary, then perhaps the stock market can continue that rally. But also, I mean, at Vanguard, what we also believe is that the US equity market is relatively overvalued at this stage.
The euro plummets in that scenario, doesn't it? Are we back at parity? Well, what goes on in that scenario? Because the Fed... Let's go with the Vanguard scenario. How many do you think the European Central Bank is going to have this year?
4 to 6 cuts.
Whoa! OK. Can we put up the euro dollar, please? A long term. As long as you got. Give us 10 years, 20 years, whatever you got. So if the Fed is where it is, OK, we've got a year. OK. Now we've got the session. OK, we can go longer, can't we, guys? There we go, that's better. We're getting there slowly, a bit more. Anyway, look, we're at 109. If the Fed doesn't cut in 2024 and the European Central Bank cuts 6 at the worst case scenario, or best case scenario, depending on which way you're, where's the euro dollar?
So the interest rate differential isn't actually as large as you think, right? It's only about 150 basis points wider relative to current market pricing.
Would be huge.
That's the key thing, right? Eurodollar's 1.09. You need an 8 or 9% depreciation to get it down to parity. That's a huge move. Most models based on interest rate parity would suggest maybe a 2 or 3% depreciation. But who's going to stand in the way of the trade?
We all know that there's irrational pessimism and exuberance out there, even in the foreign exchange market. Who's going to stand in the way of that trade if you've got 6 cuts at the ECB and no cuts at the Fed?
If there's excess volatility and we do drive towards parity, then I think that is room for thought and the ECB will probably pause.
Interesting.
But the base case is that won't happen.